Today I want to talk about a flex rate CD from Merchants Bank of Indiana that pays 5.92% APY. Now I did a review on this video maybe 8 months ago and the rate was much lower than 5.92. Now Merchants Bank of Indiana seems to be the main company that offers a flex rate CD. The flex index CD is not a very common product, so there's maybe 2 or 3 companies that offer it, and this is one of the smaller companies. Now they offer it in a 12-month, a 24-month, and a 36-month CD. So what's so great about this? Well, the high rate is nice. However, this is linked to the prime rate index. This is based on the prime rate index minus 2.75%. So right now the prime rate is 8.5% minus 2.75%. So it's 5.75% interest rate, and then when you factor the APY, the compounding of interest, the APY is 5.92%. This is a smaller company, so not the largest company that's offering this. You have to have at least $1,000 in order to invest in this. You must maintain the balance of $1,000 in order to earn APY. Penalties for early withdrawal. If we look at the prime rate, this is a website that shows the Fed prime rate. It goes back to 1947, so it's varied. It looks like from 1.75%. It's gone all the way up to 20% in 1980. I thought maybe the 70s were the highest, but actually it's higher in 1980. So we go to 73, 9.25%. Let's see here. 74. 11.75. And it goes back down a little bit. Then we get to 1980. And look how quickly it increases. It increased all the way to 20%, April 2nd, 1980. So the rate can vary quite a bit. Even in through December, it went back up to around 20%, 21% 1980 here. Actually, the peak looks like it's at December 19th, 1980, 21%. Record high. The current rate is 8.5%. We look here at the recent. If we look here, this is 2023, February, March, May. So 7.75 it went, it's 8.5% now. This was the last time of the Fed meeting, and so the rates have actually stayed the same. So if you would have gotten into this flex index CD, you could basically have the same rate that you're getting now, 5.92% all the way since July until currently. But it can go up or can go down, so it's not fixed like a regular CD. If we look at the Fed funds rate, you see from January was the low. The last meeting was in July, and it's roughly 5.25%. This is the regular Fed funds rate, not the prime rate. Now, how do I feel about this? Well, I would definitely prefer a fixed index CD. If you're actually going to put money in and keep it away for a while, like 6 months, 12 months, why not get a fixed rate? Why not get a fixed rate if possible? So Raisin is a sort of financial broker that offers some of the highest rate CDs, the highest rate savings accounts, all FDIC or credit union insured. The current rate they have right now, the savings is paying 5.3% APY. So not a huge amount of difference between 5.3 and 5.92. But if we go to the high yield CDs, it's even higher. The high yield CDs, 5.7% 6-month CD from Western Alliance Bank. It's 5.7%. However, if you sign up through my referral link, you'll get basically the equivalent of a 1% boost. You get a $25 bonus, which is roughly a 1% boost, if you were to hold it, if you were to annualize that 6-month yield. So it would be basically 6.7%. So pretty good rate, 6.7%. Now you're not going to get that the full year. You're only going to get it 6 months, but the annualized rate would be roughly 6.7%. So that's higher than what Merchants Bank of Indiana is paying for their flex rate CD, and you've got the guarantee of the fixed rate. Or you could sign up with another product like the high yield savings account at 5.3%, any of these here. Same deal, 5,000, keep it there for at least 90 days and you get the $25 bonus, and I get a little something too. With the annual percentage yield on this one with the $25 bonus would be 5.8% annualized rate if you were to hold it the full year. Because each $25, the $25 bonus is basically a 0.5% rate boost for a whole year on the 5,000. All you have to do to get the $25 bonus is sign up with any of the products from Raisin with at least $5,000. Keep the money there for 90 days. But when you go to sign up, you put in this in the referral field. You put in this code right here, Kevin P 29235. You'll get the $25 and I'll get a referral commission also. So what I've been doing with my money is I've been putting it in high yield savings accounts. The idle cash, I've been putting in high yield savings accounts. I haven't been doing CDs so much. If I were to keep the money there longer, I'd probably do a higher yield CD. But the main thing I've been doing is I've been investing the idle cash, the dividends that aren't reinvested, the interest, the money that goes into the brokerage account. I make sure that it's not getting, 0.01%. I make sure that it's getting the highest rate. So it's very easy to do if you have a Fidelity brokerage account. Right now, they're paying 5% with the Fidelity Government Money Market Fund on the idle cash. So any of the money from dividends or anything that's not automatically reinvested is getting 5%. So that's a very easy one. You don't really have to do anything. There's no thinking involved. If you have a Vanguard brokerage account, which I also have a Vanguard, the Vanguard Federal Money Market Fund is the automatic one that pays 5.3%. Just like Fidelity, you don't have to do any work. So you don't have to worry about buying anything or selling anything. Just automatically there. However, unfortunately, I do have an E-Trade account. It's now part of Morgan Stanley. Unfortunately, Morgan Stanley hasn't really changed anything as far as the interest rate. Their cash management account or the sweep account, the uninvested funds in the brokerage account, when you get interest or dividends, that money is only getting 0.01%, which is like next to nothing. And it's not very easy. They have a high yield savings account, but it's not very easy to buy that. So for me, it's easier. Their high yield savings account that they have is still not one of the highest. So what I've been doing with E-Trade, when my dividends come in from various stocks that I own, what I do with this money is I invest it in an ETF, the Wisdom Tree USFR, which is the Wisdom Tree Floating Rate Treasury Fund. I invest in this, which is a U.S. Treasuries, and it pays some of the highest rates, and it's very easy to buy and sell. Now, you could get a slightly higher return if you bought the floating rate treasuries from Treasury Direct. However, I don't like the interface, and I don't want to be stuck with a large amount of invested. I want to be able to invest small amounts of money as it comes in from things like dividends. So I may get $50 at a time, $20 at a time. One day I may have $20, the next day maybe $50. Then when it gets up to 80 or so, I can buy something like this. This is only $50 a share. Now I could do fractional, but I usually don't do fractional. This is only $50 a share roughly, and it pays, the coupon is 5.49%. The 30-day yield is 5.39% APY, so that's a very high rate. The other one I'll often do is SGov. This is the iShares 0 to 3 month Treasury Bond ETF. It has a share price of $100. So if I have $100 in there, I may buy this one versus the other one, but I use either one. Either one performs roughly about the same, and they both pay a very high yield. The 30-day yield on SGov is 5.28%, so a very high rate. The same goes with Charles Schwab. With my Charles Schwab brokerage account, it only pays 0.48% APY on the money, so not very high. So I do the same thing with Schwab. I will buy SGov or USFR ETF, and invest the money in that as quickly as possible so that I get the maximum yield. Now, if you have Robinhood, I also have a Robinhood account, but I don't have much money in there. If you have Robinhood Gold, this is a paid product that's $5 a month or roughly $60 a year. You get 5%. However, I don't pay for this, so I have the one that's only 1.5% APY. So this is still not enough. So with Robinhood, I would probably also do the same thing and buy the ETF. As far as my 2024 strategy, am I going to continue doing the same thing, buying treasuries? I'm going to continue doing the same thing, assuming that the stock market is still fairly high. However, once the stock market starts to get lower, if the stock market were to go down 15 or 20%, I will probably turn on my dividend reinvestment, and the money that comes in through dividends, I will automatically be reinvested in the stock market. And I'll also probably, and the money that I put in the brokerage account, I will start likely buying the Vanguard 500 Index Fund, VOO. I will likely start selling treasuries and start migrating more money to the stock market. The same goes, I'll probably do a little bit of tech and the S&P 500. So I may also do the Invesco NASDAQ 100 ETF, QQQM. This is like QQQ, but a slightly lower expense ratio. NASDAQ 100 is a lot of tech. This has a slightly higher 0.15% expense ratio. It's lower than QQQ, which is 0.2, but still a little bit higher than what I really like. So I may actually buy Vanguard Information Technology Index Fund, which I have some of this, VGT. And this one has a lower 0.10% expense ratio. The downside of VGT is they have a huge amount invested in any one stock. So NVIDIA, I think they have over 20% invested in just NVIDIA. And NVIDIA's, went up in price like crazy. So that's a little bit concerning. If NVIDIA is sky high, I may not buy this one. I may do the other one or the VOO. What else do I plan on doing differently for 2024? 2023 for me was basically just taking a profit on stocks that I thought were peaking, that I wanted to get rid of eventually, and maximizing the yield. So moving stuff out of the 0 to 0.01% interest and moving it all into high yield savings accounts, high yield treasury bonds, and basically making sure that money's just not sitting there, not making interest, and that I focus on that. I focus on very quickly moving money to high yield savings accounts and treasury bills. And I'm not the only one doing this. Now, I read this was from August. Warren Buffett is sitting on 147 billion pile of cash. Now, when they say cash, they're not talking about just cash that's sitting in a bank account. They're talking about treasury bills. They're talking about treasury bills and short-term investments. So it says here that Warren Buffett has short-term investments, 130 billion, and most of that is treasuries, U.S. treasuries. So basically one of the safest investments you can make. If the Federal Reserve, if the U.S. government fails to pay back treasuries, they can print more money and basically tax everyone in the form of inflation. Private investments can't do that. So that's the benefit. That's why treasuries are some of the safest investments. Here we go. Berkshire primarily parks its money in U.S. Treasury bonds. 97 billion in short-term investments were U.S. Treasury bills. In 2024, it's going to be more of the same, moving money quickly to Treasury bills or high-yield savings accounts, but I'm also going to focus on appreciation with stocks. So when the stock market gets lower, I'm going to be quickly trying to dollar cost average or buy when the stocks are low and slowly start building up the equity portion. I'm still going to be saving probably more than usual because we're going through a high interest rate period. We're going through a high interest rate period where it's sort of a boom bust cycle. And I want to have money available in case the stock market goes lower. And in the past, it's gone lower when the interest rates have gone up. The stock market's gone down. So I expect at some point it's going to go down again. But I want to be ready with some money available to buy it when it gets lower. But part of the strategy that I have is bank bonuses. And the great thing about bank bonus deals is it can be part of a saving strategy. So I have roughly $5,000 set aside in Fidelity, making about 5% interest that I use for bank bonus deals. So Blupeak Credit Union is one that I have. You can sign up with my referral. You get $200. This stuff is so easy. This is part of my sort of side hustle. Now, it's very easy to make these deals where it's $200, $300 with just a little bit of money, doing direct deposits or moving a little bit of money around from your Fidelity account to this bank or credit union. You get $200 or $300. This is one example. Blupeak, I'll put a link in the description where you can sign up with this Blupeak referral deal and get $200. It doesn't take very much money. I'm getting 5% APY in my Fidelity account. Plus, when these deals come along, I can quickly move the money, get the bonus, move it back to Fidelity within a day or two. And so it's not really hurting. I'm still getting a high interest rate, plus I'm getting these bonus deals. So I'm going to do a lot of these bank and credit union bonus deals through 2024. And I'm going to start focusing more on referring others whenever there's an offer available like this. None of these things are illegal. It's all legal. These are registered banks and credit unions. You don't have to worry about, some Bitcoin thing or crypto thing where these guys go out of business overnight. What are your investment plans for 2024? Are you going to do things differently than 2023? Or what suggestions do you have for 2024? Please feel free to comment below. And thanks for watching.